my time, think it's my year. Yeah.
Hey, good morning, everybody. Happy CPI day to those who are observing. Welcome to the morning show. Spencer Israel, JC Parets. We are going to talk about this number. I guess we can talk about it right now for a second, and then what we'll really do is, with regards to CPI, we'll break it down with our analyst, John Netto, in about, I don't know, call it 50 minutes, maybe an hour or so. He is trading this number right now. So when he's done with that, he'll pop over and walk us through the number, what it means, and how he's traded it and what it means going forward. Great guest today. Man, are we excited. We actually got a request for this guest yesterday. Unbeknownst to this person, they were already booked. James Bartelloni, Barts Charts. It's going to be a good one. So that's the rundown for today. Kimmy Sokoloff will join us as well. You know what to do. Smash that like. Let's get the show on the road. Where's my intro? What's up?
Mr. Israel.
How we doing?
Happy CPI, baby.
Yeah. Happy
So,
CPI.
are they happy about it? Are they upset about it? Do they not care?
Looks like it's been relatively muted, the reaction so far.
I see the Dow future spiking, S&P spiking, NASDAQ up 1%.
Yeah,
So
I have to drill down. My problem is I'm on a daily, which is
you might not care. I certainly don't. But the investors, the knee jerk is higher. So I'm looking forward to hearing what Netto has to say.
Yeah, I mean the month-over-month number came in a smidge below estimates. The year-over-year number below estimates. The core, that was for regular CPI. Core month-over-month and year-over-year also came in below estimates. So everything came in below the estimate. And yeah, disinflation continuing to happen, right? We are continuing to see the rate of inflation fall. So I think it just we'll find out what Netto says, but it seems like it reaffirms what the Fed has been saying they will do, and the market.
Spencer, it's almost like if the stock market was a discounting mechanism and a leading indicator, almost, huh?
Yeah. I mean, sometimes you don't always know if the data will jive with those forward-looking ideas, but it seems like the data jives with it today, and the market likes being right. And it likes certainty. So
let me tell you something before we get into state of the markets, because I'm gonna hop here in a little bit because I'm at the beach, so I'm gonna go jump in the ocean, and I just want to say how healthy it is to jump in the ocean. I think it's underrated. I think that I think people fail to realize just how important it is to jump in the ocean, get the nutrients in your body, get the sun, and I'm gonna go ahead and do that. And since I'm not gonna be around for recess while you guys are chit-chatting about, Barbie movies, I'll be in the ocean working on my backstroke, Spencer. How do you feel about
that? Confession, I have not been to the beach yet this summer.
It's not good. Phil Perlman will be very upset with you, Spencer.
It's not a good situation.
Get Perlman back on the show, by the way. Get him back in here.
All right. Yeah. We talked about going this weekend, but no firm plans. All right. Let's go state of the markets. And then we got some what's moving and we got some stuff going on. So let's do it.
Did it. Ladies and gentlemen, let me just explain something to you. Sector rotation, the lifeblood of a bull market, right? In bear markets, what tends to happen is that you have the culprits, right? You've got the stocks and the sectors that are dragging the market lower. Every cycle is different. 2007, it was home builders and financials, obviously, right? The latest bear market that we got was growth stocks, tech stocks, as interest rates absolutely spiked and ripped higher. These growth stocks got hammered. ARK funds and biotechs and Chinese internet. Those were the culprits of the last bear market. What ends up happening in bear markets is that the leaders, the last ones holding up, tend to succumb to the selling. So, for example, the biggest growth stocks, the worst ones, peaked in February of 2021. It wasn't until months later that some of the more value-oriented areas started to get hit and started to fall apart. That's what happens in bear markets. You get sector rotation to the downside. Now, in bull markets, you get sector rotation to the upside. The laggards tend to catch up to the leaders. So in the back half of last year, the laggards were growth, tech, communications, discretionary. Everything else was working. So what happened coming into the year? You got that station. The laggard stocks, those tech stocks, caught up to the more value-oriented areas that were already working last year. And sure enough, now they're the best performers year to date. So what would be the logical next step, right? The logical next step, if this is in fact the bull market that we've successfully been betting on, is that we get rotation into other things like industrials and materials and even financials and energy. So why don't you show what could potentially be the start of this rotation? We're looking at energy relative to tech, and we're looking at industrials relative to tech. And this would be a pretty logical place for us to get some of that rotation. You know, when you look at technology on an absolute basis, we're back to those former highs. So some digestion of these record gains, because let's remember, we came into the year and these idiots were telling us that we were in a bear market. As it turns out, it's the exact opposite. The NASDAQ is off to its greatest start ever in history, which by definition is the opposite of a bear market. But nevertheless, there's a lot of different sectors. The ones that were working last year are starting to work again over the last couple of months, things like small caps, industrials. And then this chart, I think, really tells an interesting story. This is energy relative to tech. So as that black line is going up, that's energy outperforming tech. As the line's falling, that's tech outperforming energy. And then in blue, you're looking at industrials relative to tech. So in other words, as the line is going up, industrials are outperforming tech. As that line has been falling, that's tech outperforming. So we're back down to some key support levels in both of these ratios. So to me, this is front and center. We've been betting on industrials. We've been betting on energy, actually, also over the last couple of weeks. So we're betting that this rotation comes in. And it doesn't necessarily mean that tech needs to fall, right? We're just talking about some of the other areas outperforming. Tech could fall, right? But it doesn't have to, right? It's more of a relative strength sort of situation. Let's keep this party started. Let's keep this party moving, because the catalyst, GC, what's the catalyst that's going to take stocks higher? Is it earnings or the inflation or the Biden or all? None of that stuff matters to us, right? We're interested in reality. And the reality of the matter is that we have seen a very strong negative correlation with equities and the United States dollar. It's been very strong. You know, I get some pushback. They're like, well, JC, in the 90s, it wasn't like that. I was like, well, it's not 1990. It's 2023. What the hell does the 90s have anything to do with it? Correlations are constantly changing, particularly in the US dollar, as you'll find. So we're interested in the correlations now, because us mere mortals have to invest in the market that we're currently in, not the one in 1990.
It's true.
Right? And right, I mean, call me crazy. Like, JC, but in 1992, it wasn't like that. It's like, yeah, well, that was before Twitter, right? So I'm looking at a strong negative correlation here. As you could see, when the dollar peaked in late September, early October, you know, underneath the surface, stocks had already been rallying for several months, but things really got going in the fourth quarter once the US dollar started to roll over. So if you look at the next chart, to me, shows that vulnerability in the US dollar. You know, this is a classic continuation pattern in theory, right? Of course, we don't know. But when I look at this chart, am I like, I really want to buy this chart? Not really. Quite the opposite. You know, for me, this is a classic continuation pattern within an ongoing downtrend. And if that's the case, we want to bet on a lower dollar. And using today's market environment correlations, not the one in 1990, but the one today, a weaker dollar is a tailwind for equities to rise. So the question is, should we be allocating more and more of our time looking for stocks to buy, or should we be spending more time looking for stocks to sell? And the weight of the evidence continues to suggest that we should be allocating our time looking for stocks to buy. So I'm going to talk to you quickly about a few names that we've been buying. Caterpillar for one. Throw that chart up there, funds. You know, we had a lot of, I got a lot of pushback when we were buying Caterpillar, even from our own our own guys, Strazza and Sean. I remember we were in a meeting, and remember Fonz, they were just like, JC, this chart doesn't look very good. And I'm like, I know. But if you reverse engineer the bull market that we've been betting that we're in, and we expect sector rotation for this bull market to continue, if that's what this is, then industrials are going to catch a bid. And we use Caterpillar as a vehicle to express a bullish thesis in industrials based on the potential rotation that we saw coming a couple of months ago, or at least that I expected. The fellas, the guys that are in Asia right now, we're not having it, but they're like, the risk reward, JC, makes sense, so we're going to go with it. And that trade has worked out very, very well for us. And it continues to work out as industrials are making new all-time highs. I think Caterpillar will too. Another one a couple of weeks ago that I stepped in on is Chevron. I think people just assume energy's dead. Warren Buffett doesn't. He's been loading up on Chevron. He's been loading up on Occidental Petroleum, if that means anything to you. I find that interesting. Me and Uncle Warren have different objectives, different time horizons. What I find hilarious about Warren Buffett is that I think he's like, how old is he? Like 93? And he's still a long-term investor? Like,
I know.
Like he's betting for the long term. The dude's 93 years old, which is, I find that, good for him. I feel like when I'm 93, like I'm going to be YOLOing the hell out of this market. Like I'm not going to be a long-term investor when I'm 93 years old, right?
Yeah. Well, when I'm 93, if I even make it that far, I'll just be worried about making it. Being able to walk around is probably the primary concern.
See, Spencer, I'm playing with house money. If you would have asked a lot of my friends 20, 30 years ago if JC would be around at 41, I think a lot of people may have been taking the under, Okay. So I've already exceeded expectations the way I look at it. So I'm playing with house money here, Spencer.
There we go.
150s for me for Chevron. Heck of a last few days for energy stocks in general, oil services. Great week so far. We really got going on Friday. Chevron, really happy with that position. I continue to like that. PayPal making moves. I haven't gotten this much pushback on a new trade in quite some time. When I was talking about putting on, aggressive long positions on PayPal, people were not very happy with me, Spencer. They were not happy with me at all. And when everybody agrees with me, it starts to get a little scary. Right?
Yeah.
It's when everybody thinks I'm crazy that I have found over the years, I might just be on to something. 6, I still like pay very, very aggressively long. That hasn't changed. And then finally, with this one, this is a marathon. These crypto miners are absolutely ripping. Not sure if you saw the news yesterday. Vanguard filing, they own 10% of Riot blockchain, one of the
I did not know that.
Yep. Vanguard, kind of a big deal, Spencer. Right? I don't know if you've heard of this Vanguard.
They don't strike me as like, let's buy a stake in a Bitcoin mining company type of a company. You know what I mean?
So what does that tell you?
Wait, no. What did the filing say? That's it. That they own 10% of Riot.
Are you not entertained? Is that not enough for you?
I'm just making sure that's what it was.
To your point, Spencer. To your point.
Yeah.
Vanguard investing in a crypto mining operation, like I didn't have that in my bingo sheet, right?
I think Jack is rolling over a little bit.
Well, rest in peace, Jack. This isn't your problem anymore, right?
No,
the decision makers here are betting on crypto miners. That's eye-opening, especially with what you're seeing out of Blackstone and BlackRock and Fidelity and all of the other major players that have been stepping into the space.
Oh wait! There's more. There's more. Riot owns Vanguard owns 17 shares of Marathon. They own about 18 million shares of Riot, and that brings they own both, and that brings their Bitcoin miner exposure to about $560 million.
Oh, is that all?
Is that all?
Listen, my point is, I remember back in 2016, 2017, 2016 in particular, having conversations with, Bitcoin people, if you will. And I remember being long Bitcoin as a trade, but arguing that it doesn't matter because the institutions aren't in. It's too small. I remember making the argument that the institutions were investing in like the infrastructure of crypto, but not necessarily in the coins themselves. And here we are 6-7 years later, and we can kind of make a similar argument. They're still investing in the infrastructure itself and the picks and the axes, but they're doing so at a much more aggressive rate. It's not just, a few hedge funds behind the scenes and some private equity companies behind the scenes. These are the biggest players in the game, actively investing in front of our very eyes. I think that's worth noting. The Vanguard thing, as interesting as that is, becomes less interesting because all the other players are involved, right? At this point, if you would have told me 6 years ago Vanguard's doing this, I would have like, no shot. But the fact that all the other players are doing what they're doing and Vanguard stepping in now, I think it's interesting. Jeff is asking about Marathon, that 20 going to be big resistance. Yeah, I think so. That's been our target. Right, that represents 100% return for us. We'll go ahead and take that any day. But, and I haven't decided what I'm going to do. You guys are going to see it in real time. I'm going to tell you exactly what I'm doing. I own the 30 calls and I own the 20 calls. So what I'm thinking I'm going to do is when we get to 20, I'm going to take everything off the table. Completely, the 20s and the 30s, and I'm going to reevaluate, and then and this is what I think I'm going to do. And then if and when Marathon is able to exceed 20, I'm going to put something back on. I think that's what I'm going to do. I haven't fully decided because our target was 20, so I want to be disciplined and take profits when we get there. But then I added to the winning position and I bought the January 30 calls. So that's sort of where my head is at. I want to be, transparent here because I think that the thought process adds value here. It's not just like JC says buy, so we should buy. No, it's like there's more to it than that. So I think when we get to 20, I'm gonna take everything off the table. Here we are already at 18, quickly from 10. So already 80% move higher, very, very fast. So, but what's really interesting though, Spencer, is that Marathon and the others too, Riot and Hut 8 and all these, they've been doing as well as they're doing, and Bitcoin hasn't even gotten going yet. That's the thing. If you would have told me that Marathon would be doing what it's doing and Riot would be doing what it's doing, I'd say Bitcoin's already pushing 40,000. It hasn't even gotten going yet. So even though 20 was the target for Marathon, the fact that it's doing what it's doing and Bitcoin hasn't even broken out yet, makes me want to lean more patient with this, right? So that's the dilemma. I mean, this is real life, guys, and it's not like this is a small trade for me. I have serious exposure on these, so that's where my head is at. Any questions on that? Am I crazy, or am I thinking through this logically there, Spencer?
No, you're thinking through the Marathon logically. I'm thinking more about the Vanguard thing. What is the nature of these investments? Like Vanguard owns stuff on behalf of clients. So do they just own Mara and Riot on behalf of their clients? Because that's not the same thing as like saying Vanguard.
I think it's on their own balance sheet.
Okay, that would be more notable.
Okay. You guys can confirm that for me, but they wouldn't have to file like that.
That's true. That's true. You're right. They wouldn't have to file on behalf of their clients. You're right. Yeah. You're right. Okay. You're right. Okay.
Yeah.
And who was it in the chat that just said they were up? They doubled their money. Yeah, I'm up 100% on Mara. 92 fish gut. Nice job. 92 fish gut.
It's a great handle there.
No, I mean, you're thinking through it logically.
Because things change, Spencer.
Yeah.
If you would have told me, if you would have just given me the Mara data and said this is what Mara did, I would have said 100%, no questions asked, like Bitcoin's ripping 35, 36, maybe even 40,000. Guaranteed, right? Guaranteed. Like Charles Barkley, guaranteed, right?
Yeah.
And And that would have been very wrong, right? It would have been very wrong. So the fact that when I think something going into an event and I am totally wrong, like night and day wrong, like I am in this case, right? Like Marathon's doing what it's doing. Bitcoin hasn't even broken out yet. So I would have said I would have told you, Spencer, there's a 0% chance that Marathon is doing what it's doing and Riot and Hut 8 and the others without Bitcoin moving. I would have said 0.0% chance, Mr. Blutarski. And how wrong have I been on that? So the fact that I'm that wrong says a lot. Like, to me, that's eye-opening and worth paying more attention to. And for me as an investor, somebody positioned in the growth of these companies, or the stock for that matter, maybe I need to be more patient with this, is where my head is at. Because of that, because I was so wrong. In a similar way to in the fourth quarter last year, we were bearish the US dollar. And I would have said silver and gold probably do well if the dollar falls apart. That's exactly what happened. I would have also said that silver would outperform gold in that environment. That also happened. I also would have said that international stocks would have outperformed US stocks. That also happened. What didn't happen, however, is that I would have also said that emerging markets would have outperformed developed markets. And that did not happen. It was actually the developed markets. It was Europe and Japan outperforming in a weaker dollar environment over emerging markets. I was so wrong on that. It was eye-opening. And what are you seeing? You're seeing Japan making new 33-year highs. That the market was telling us that 3 quarters ago, right? Because I was so dramatically wrong in that view. This is kind of like that, right? This is kind of like that. Like, I'm so wrong. It's like not even close. And that's interesting. It's interesting to me.
I think the price action in the miners is one thing, but like the price action in Bitcoin is probably more, to me, like indicates more where we are in like the cycle, right? Like I think when Bitcoin and Ethereum and the altcoins, when they really start to get going, then we're maybe in the later point of that.
I'm gonna correct that. I didn't own the 20 calls. I think I may have said that I owned the 20 calls. I owned the 14 calls. That was the trade we put on. We published that trade, and then I added to that owning the 30 calls in January. So those 14 calls are up 200%. So that's a triple. That's a triple on those, and we published that. That was a trade idea that we gave away for free. So if you want to drop the link to that trade there, Alfonso, if you want to find that, you drop the link. Then about the 30 calls, and those have doubled since then. So initially they weren't that huge of positions, but now they're big positions. So I really need to think through this, right? So that's where my head is at. Full disclosure. That's what I'm thinking here while I'm at the beach, working on my backstroke. I'm thinking about what I'm going to do with these damn call options. That's real life, Spencer. It's real life.
Totally fair question. Okay. What else is one to think about at the beach, I suppose? Let's move into this one. What's moving, and then we have to go to our guest.
You can drop that link that we just put.
Yeah. I see you, Fonz.
So guys, if you want to see the thought process on Mara, and I remember, specifically on this trade, Mara was consolidating really tightly, and I remember being in our meeting and be like, Sean, what we should do is we should buy a straddle, because it's going to resolve in one direction or another, and volatility is super cheap right now. So this was a couple of months ago. So right, what day was that? What day was it that we put that trade on? A couple months ago, right?
It was
May, I think.
May 31st.
Okay, so it was the end. So it was about 6 weeks ago. That makes sense. So I remember thinking, okay, let's put on a straddle because it's going to make a big move one direction or another. And then Sean was like, nah, JC, don't buy the puts. Let's just buy the calls. And I was like, all right. Thank you, Sean. Nice call. Very nice call. So that was all Sean on me. I would have taken the other side, and we would have made money on this trade. I mean, I guess technically we would have made the same amount of money. We would have just lost money on the puts. So it would have been the end of the world, but we saved ourselves a couple of bucks because we listened to Sean. Listening to Sean tends to be a wise move, I've learned over the years.
Speaking of Sean, I'm hoping that either Sean or Strazza will be able to join us this morning. They are in Ho Chi Minh City for the next couple of days.
Can we update before we bring in Bartellones? Can we update the folks on what's going on in Asia? The fellas are shooting a docu-series. They're Sean and Strazza and Giancarlo Riley. They're all out in Asia, 8 different countries. They're interviewing the best traders in each of these cities. They were at Jim Rogers' house last week. They were at the Malaysia Stock Exchange, the Bursa Malaysia, a couple days ago. Now, Riley and Strazza were playing golf in Ho Chi Minh. My understanding from the fellas is that this is their favorite city so far. Granted, it's only their 3rd city of 8. So, small sample size. But nevertheless, they are blown away by Ho Chi Minh. I've never been. I've been to all of the places. I've been of the 8 cities they're going to. I've been only to 6 of them. I've never been to Bangkok or Ho Chi Minh. I've been to Singapore, Kuala Lumpur, Taipei, Hong Kong, Manila, Tokyo. And am I missing any? I've been to all of those. Haven't been to Bangkok or Ho Chi Minh. So really cool. I heard the Vietnam Museum in Ho Chi Minh was like crazy. Like, they were getting a little emotional, I heard.
And we have confirmation that Riley brought his own golf clubs. Like he now has to. Now he has to schlep them around half of Asia.
He should just ship it home, right?
That might be the move, actually.
Why would he take your?
I'm not paying for that, but
why on earth would he take his? I told him he was going to play golf. You could rent clubs. Brings his own golf clubs.
Yeah, he's a pretty hardcore golfer, man.
You're going to bring your own clubs? You're going to go to 8 cities in Asia and you're going to bring your golf clubs? Like, come on.
All right, real fast. Actually, you know what?
See what I'm dealing with over here? You guys see what I'm dealing with?
Yeah. Yes, it's crazy. Always crazy. Always hurting sheep. Hey, if you want to get alerted to when we post each episode of this docuseries, it's not going to be for a little while. We obviously have to come back. We have to edit. It's going to take a little bit, but we're going to do an episodic format. We're going to do them one by one, not Netflix binge style, just one at a time, I think. And we're going to host watch parties as well and show some exclusive behind-the-scenes footage there. If you want to get involved in that, I just dropped a link into the chat. The link is wallstreettoallstreets.com. That's the URL. I'll put it on the screen, actually, in case you don't want to have to go to the chat. It's wallstreettoallstreets.com. It's a little small there on the left-hand corner, but that's it. Sign up. You'll get notified when each episode is posted. You'll get notified for watch party dates and times, and that's what I would recommend.
This just in. I get a text message from Strazza right now. It's 9:00 p.m. in Ho Chi Minh.
No, it's 8 o'clock.
It's 8 o'clock over there. Yeah. He says, Strazza, and I quote, "Today was quite possibly the best day of my life."
Oh my gosh.
I mean, he played golf in Vietnam, and he's probably eating great. And they sent me they were getting like a pedicure or something. I don't know what these guys are doing out there.
Strazza, yesterday on Spaces, Strazza was like, "We had this great food. What was it called?" And Sean goes, "Banh mi." Anyway, okay. We have a certain someone in our chat who has been requesting our next guest here. In fact, he said, I think it was Joe. He said, we need an hour-long conversation with Bart. Well, I can't promise an hour-long conversation.
I can. I'll do that.
You'll do that. Okay. What I meant was I can't promise that today. But what I can promise is that we have him here. So let's bring Bart on the show, and we have his charts at the ready, and see what's going on.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Bartelloni. Dude, this is...
What's going on, man?
This is my dude. For those of you guys who don't know, Bartelloni, too much headspace. Move that camera down a little. Come on. Pretend like you've done this before. Dude.
It's fine.
Bartelloni is a legend. A
in my own mind.
God amongst men. Us mere mortals here. I remember I had lunch with Bartelloni once, and I brought my wife along. And we're sitting there, we're talking about all kinds of math and planets and solar systems. And afterwards, Morgan and I are walking away from the restaurant. She looks at me, she's like, I don't know what the fuck that guy was talking about.
Neither do I.
It's very
How the
heavy,
kids,
Bart.
man? How's everybody? Kids are good. Everything's good.
Dude, I'm at the beach, man. I'm gonna go jump in the ocean. Work.
How the waves? How the
You know what I'm
waves?
saying?
How the waves?
I'm not a surfer. Bartelloni surfs. It's funny. Patrick the other day, I'm like, yo, why aren't you surfing with Bartelloni? And he goes, because Bart does this thing that old guys do where they stand up on it.
All right. Thank you for telling me that, because I've told him to come out. Yeah, Sunday it spiked to 5 to 7 feet, and I was out there. I'll send you a video. Double overhead.
Dude, good for you,
Awesome.
man. Good for you. Good for you.
Yeah,
All right,
I love it, dude. You know that.
Bartelloni likes to refer himself as an intermarket musician.
Yeah, man.
Do you still go by that, or have you changed? Are you like the big cactus? Do you go to different teams and change your name?
What?
Yeah, thank you,
remember
Spencer.
Shaquille O'Neal went to the Suns. He changed his name to the Big Cactus.
Nobody remembers.
I didn't know that. I'm not a baseball fan.
You were like, wait a minute, Shaquille O'Neal played for the Suns?
Nobody remembers that, JC.
No, not at all. Thank you, Spencer. I have no idea what you're talking about.
For the record, if you never saw Shaquille O'Neal playing for the Suns, don't. It'll hurt your eyes. It was bad.
I'm gonna have to look. I might have remembered that it was 1 year or something, right?
Maybe not even, like half a season.
Yeah.
Half a season.
Yeah.
All right, Bartelloni. So what is an intermarket musician, and how does that help us make money?
Well, first off, JC, I'm all about the patterns, right? And when you look at the ratios and the patterns that we form in the market based on geometry, in the end, it all goes back to music, right? So what I love to do is that from an intermarket perspective, like we were talking CMT, right, is use all available information, not just one sole source information, right? Like I'm very interested in China right now, right? If you look at the cascading effect of China, the Chinese market usually cracks first, then comes Australia, right? Then comes Canada, then comes the DAX, then the United States. So China's showing some signs that there's another leg down coming, right? So that's intermarket technical analysis, right? And then we do ratio analysis. Like I looked at NVIDIA and the XLP, right? I'm like, all right, how bullish is NVIDIA? Are people really interested in it? And it was really fascinating because this long-term, obviously people have been interested in NVIDIA, but if you take NVIDIA over the XLP, you'll find that it's hitting some significant resistance, right? So that ratio will show us what the institutions like, what they don't. So when they start moving into staples, it's kind of a risk-off mindset, right? So this
the fact that they haven't been moving into staples is evidence of strong market environments, and that's
bingo, right. So we have this major, target that we just showed on NVIDIA. I think it's about, I don't know, $8 to $10 higher. At the same time, we have this kind of, let's say, sentiment indicator showing that, hey, they might start moving into staples compared to NVIDIA. So it's intermarket technical analysis, but I'm using the ratios based on music. So I said intermarket musician. But here's something too. I was looking at it, JC. I'm neither a bull nor a bear, right? I just try to take the pattern on a long term and run with it as long as I can, right? I've been long DBA for over a year, right? I'm a big believer in the commodities, the soft commodities. I've been long TBT for over a year, right? I think right. So I use the patterns to try to get into an underlying trend.
Commodities higher, bonds lower.
That's right. And right now, I think I sent the chart over. I mean, there's a beautiful cycle working on the bonds. I think that we found a low in the bonds, that the bonds will bounce for a week or two, but I still think we need a couple more waves down to finish it. So there's the cycle right there.
Man, I'm looking to put on some long bond position, Bartelloni. The large speculator positioning is very aggressively short bonds. So when you think about the dumbest money on the planet betting the most aggressively short bonds. So in other words, the dumbest people in the world, not the dumbest people in the world, but the worst investors in the world, I should say. The worst investors in the world, particularly when they're at consensus, are betting the most aggressively ever that this 40-year bull market in bonds is over. And kind of like what's the college football guy? Not so fast. What's his name?
Corso.
Not so fast.
Yeah, I think we're due for a bounce, right? I do think we have another couple more legs down in it, but ultimately right now, look at that. It's a perfect 89-day cycle. I mean, it's a trading.
And what? Tell me what's so magical about 89 because it falls on the Fibonacci sequence.
Well, that's important, obviously, too. The other thing, the synodic period of Uranus is 89 years, 12 times 7. No, that's 84. Sorry, but I digress. But 89, yeah, it's a Fibonacci number, but more importantly, it's just the number. You can see that it's timing all the lows. It'll end, right? It'll end someday. But right now, I mean, it's been exact for almost 2 years. So I would see some relief, a relief.
Hold on, let's back off for a second because you just threw random planets. Can you explain to me how the planets have anything to do with how we're making money here? Because this has happened many times over the years because Bartelloni and I have known each other for a long time. I mean, Bartelloni and I met like in 07, I think. And
yes, JC. In fact, that we got to talk about. But the only thing you can use the planets for.
Hold on. Let me set the stage. This is true. I'll get a random text message from Bartelloni at like 7 o'clock in the morning on a Saturday, and it'll be like, JC, Mercury is doing this, so we need to buy soybeans.
Mercury's in retrograde.
And it's like,
yeah, everyone's freaking out. No.
Wait, what? Like, can you explain to me how the planets have anything to do with this?
Sure. And
I know this is like a 2-minute conversation, right?
The bottom line is they are precise in their orbit, right? It never changes, right? I mean, the Mayans to this day are still calculating eclipses 5, 6, 7, 10,000 years later, right? It never changes. The other thing too is those planets have an energetic effect on us, right? The moon does the tide, women's menstrual cycles. You can see it over and over again, but more importantly, these planets leave footprints, right? I see the footprints as measured moves. And so what you can do is you can find out the heartbeat, you can find the beat that's going on within the planets. And therefore you can make a, relatively speaking, educated guess on timing, right? So that's really what I'll try to use them for. Number one, I'll look for is the footprint. In fact, I was looking at the ES right before we were getting on. And I still got a little bit more work to do because you bring back 2007, you were actually running in Wall Street and you were actually running in Central Park. I was playing when the dam breaks because I was like, this thing's coming unglued. And remember that? And so, JC, we're actually at one of those moments right now. So as a pure pattern player.
What was I listening to while I was running in Central Park that time there, Bartelloni?
Schiller's book. You're listening to an audio book. I'm like,
nerd alert.
What? He's running around Central Park listening to an audiobook, trying to learn the CMT. I'm like, we gotta get to know each other.
And here we are.
This is what, God, 15 years later. But if you call up that S&P chart, we are at a very important inflection point in the market per se. So if the bulls really want to take control, they have an opportunity to do it. It's right here, right? If the bears want to take control, then this level needs to stand, kind of like the Big Lebowski. Man, this aggression will not stand. So what I'm looking at here is simply.
I think this show has broken a record for the most Lebowski quotes.
I love that
financial
movie.
Programming.
But we really need to watch it. I think on the ES, JC, on the ES, it's like 432, 4532, 4531 to about 4550. Yeah. That's my line in the sand, right? Now, the banks, they also have a sell pattern coming up. So my two keys for, hey, we're getting ready to really run number one. I think Tesla finished a wave 4 at that low a couple months ago. So I believe Tesla's going to make new highs. Tesla makes new highs, market ain't going down. Apple, I think we had the last major top was a 3. So I think we're in a 5th wave of Apple, but I don't even think we finished the first of the 5 waves, right? So I think Apple's going to go higher. If those two puppies are going higher, stock market's not going down, right? We could shuck and jive and everything like that. So for me, I'm watching junk bonds. Junk bonds have not played in this at all, right? They've been dead. However, you go out to a monthly chart, there you go. That little candle at the bottom of that triangle, that sure looks like it wants to bust up to the upside. Junk bonds start rallying, this market ain't going down, right? So I've been watching junk bonds really closely. And the thing I'm highlighting in the blue, and this is just basic technical analysis, right? That blue square is, look at the wicks when junk bonds found support. It's noted, right? But this last support we found, it really wasn't that strong, right? It was kind of like bounce. So And then I did the basics, right? We talk about it all the time, lower lows, lower highs. So the bottom line is we got a higher low. And if we break out of that consolidated triangle to the upside, this market's ripping higher. I don't care.
Yeah, and I'm looking at junk bonds relative to treasury bonds and looking at those credit spreads. And every time that they tell me that the world's about to fall apart and it's a bear market and all of these things, I look at bonds and I'm seeing the exact opposite. I'm seeing, credit spreads contracting, not widening. And that is the exact opposite of a bear market. That is the exact opposite of the end of the financial system.
That's right.
Me, that's been, it's not just new, it's been evidence of healthy market environments. That's exactly what we see.
Yeah, and I don't know what.
Think about it, Bartelloni. Who are you going to trust more? Are you going to trust the bond market or
bond market?
Sexy cow 69 telling me bond that market. The stock market's about to fall apart, right? On
bond
Twitter.
Bond market.
All day.
Yeah. Okay. And the other thing too, talking about bonds, interest rates, everything like that, it's kind of a no-brainer. The dollar just broke down from a triangle. It was a perfect A, B, C, D, E down. And I think that's a C wave. So I think right now the dollar's about to get smoked. I'm long yen. I think that is the trade of the year, the rest of the year, to be long yen. That thing might rip. And what was a bummer was we had a perfect setup on the spot currencies. That's kind of where I cut my teeth. So I actually had an entry order waiting, and it stopped. It stopped at the 707. Remember that one?
And you're long yen futures, like you're long dollar yen?
No, well, I missed my entry. I had an entry about 80 pips higher. It stopped at the 707 retracement, and I'm like, it's got to go up there because it was too perfect, right? And so it rolled over and died overnight. So I went, crap, I've missed my spot FX levered position. Let me go look for a stock position in ETF or something. And so I looked at YCL here, and this is what I bought yesterday, right? I bought YCL, and we're risking $2 to potentially make upwards of, 10 to 1.
I like where your head's at on the dollar yen because yen against dollar looks way better than yen against euro.
Yes. Yeah, the euro's smoking it, right? And I'd be long euro, which sounds crazy, right? But I think the dollar is about to get smoked for a couple months. But this YCL, this is a log chart, JC, and I do the whole measured moves. These measured moves, those blue arrows, they're exact, right? So that, let it go, let it come back, and then buy the pullback. And so we're risking about $2 to jump up to almost $30. So it's almost
like this trade a lot. Bartelloni, listen, I gotta go, and I know you gotta go too. Quickly,
love it, dude.
Best taco in San Diego. Go.
I'm going to go, and people don't like this, but I'm going to go with this place. It's called Calientes by Torrey Pines. It's perfect.
Calientes.
Perfect. Calientes.
For you gringos, that means hot. All right. Calientes. All right.
I haven't had that.
Hey, dude, it's great to be on the show. Watch the banks today and watch that level on the ES. It's everything, man. If we blow through that level, this puppy's about to take off.
I'll be in Southern California in 2 months hanging out with you, San Diego. So
hey, dude, we'll get on the paddleboard for all those old men, like Patrick said.
He said it. Don't shoot the messenger. Don't shoot the messenger. All right, Bartelloni, I'm out. Spencer, love you, bro.
Oh, man. Out. All right.
You guys have a great rest of your show.
Thanks a lot, Bart.
Kimmy. I'm gonna go work on my freestyle in the ocean.
What? You can't hang out with us? The beach is calling you already? Oh my goodness! All right, I gotta get Kimmy on. I'm in a fast market here, so here's what's gonna happen. JC is leaving. I'm gonna bring Kimmy on, and after Kimmy, I'm gonna bring Sean on from Ho Chi Minh. After Sean, we're bringing on John Neno to talk CPI. So I got a lot going on here behind the scenes. Let's get Kimmy on and talk about it. She had a good day yesterday. Shocker, right? Kimmy, what's up?
Good morning. So JC left. Where'd he go?
JC left. He's at the beach this week, and yesterday he tells me, he goes, by the way, tomorrow I don't know if I can hang out the entire show. So, okay, here we are.
It's 9:15. He's ready for the ocean already?
Well, yeah. I mean, you got to get the beach time when you can get it. It's really hot up here and pretty humid, so you got to get the beach time when you can get it. Looking at your trades yesterday, Kimmy, and you had a good day. You made a lot of trades yesterday.
Oh my God, so many. And so, see, last week, JC and I were talking about it. One day last week in my morning note, I had Roblox, RBLX in there, saying when it breaks 43, potential to 44.90 or so, right? So, JC and I, we talked about it. It's got to push past 43. Yesterday, alerted, it went off, and boom, it ran. I didn't hold it as long, but I held it up to near 44 because I never trust that name because it trades weird. It's the first time it broke past this this little like barrier area, this resistance area, and it pushed right through and went. It was a nice one. I was like, oh, look at this! It's finally going.
So you have overnight. You took 6 positions home with you overnight. 3.
Some of those I have for a long time. My short.
True. Right.
Those I have for a while.
But the open longs, Hess, right, Amazon, and VXX were the 3. So, but as far as the day trades, though, let's see. Of all the winners, you had UPS, Laser, Roblox, Lyft, Twilio, Adobe, PayPal, the Russell. Which of those like jumped out to you?
Well, they all did. So Laser, LAZR, and Lyft, they're smaller trade, meaning like they're small price, junky type of stocks. So I'll take a bulk in it and trade it for like 20, 30 cents. Those, I trade them small to take my piece of the pie. But if you trade those names for like 20 cents, that's 2%. I got 4% total on those, right?
Yeah.
So it's a 4% move on 2 trades. I could have held them longer, but I never trust these type of stocks. So I take my money, but I always let the room know, say, hey, it has potential to here, right? PayPal I got out of quick. This morning CPI was out at 8:30. It did hit my target at 71.35. Some people in the room did stay with the stock. I did not. IWM, I was looking for really 190, but I took my profit yesterday, but never hurts to take a profit, So anyway, and then I moved on. LMT, I took a loss in, news came out and the stock went against me. And I really should have stayed with it. So it was my mistake, and then reversed and went back up. So it did eventually hit my target, a stock that I stopped out of. I would have had another trade on there.
Yeah. And then, Lockheed, you sold at a loss and eventually, right, hit the target.
I did go back up. So it is what it is. That happens.
Yep. Guys, Kimmy publishes 2 notes a day. There's a morning note and an afternoon note. And those notes, unlike her room, those notes are available to everyone. If you want to get Kimmy's morning and afternoon briefings, this is what you should do. You should just email us. I'll put our email up on the screen. It's questions@stockmarketmedia.com. Just put Kimmy's note in the subject so I know what the heck you're talking about. I will get you on the list to get Kimmy's note. That is free. What is not is the QR code on the screen. That is the link to Kimmy's room. That's where she goes every day when she leaves us here on this show. And she is there live trading the open every single day because it's what she does. And she's got winners. And unlike the note, which tells you what happened after the fact, this tells you what happens as it's happening. You get the alerts as they're happening. You can get in with her if you want. No one can tell you what to do, obviously. It's your money, your account. She can't tell you what to do. But she can give you guidance. She can give you her thoughts on a trade, an entry, and exit. And she does that every day through the open and throughout the morning. So the link is in the description. The link is on the screen, and CPI, Kimmy. So we may be a little volatile off the open here.
Yeah. We'll see what goes on. Let's see if it's a gap and go or gap and crap. Let's see if they fade it or not. Right? I'm watching. Gap ups are hard. Sometimes I want to go contrarian on it, right? So
I don't know. We're making new pre-market highs in the S&P here, so
yeah, I know, but we'll see.
All right, Kimmy, have a good one.
All right, bye guys. Good morning to you.
All right, guys. We have Sean McLaughlin here. Options Sean joining us from Ho Chi Minh City, and I have a nice little pretty bumper for you, Sean, that we made. Of course, I didn't make it, but the guys made it. And let's get Sean on and see what's going on in Vietnam. Yes.
Whoa, that was fancy. Nice.
What up, man?
Oh man, we are in. I'm in my hotel room, so this isn't very sexy.
Okay.
But we are in Ho Chi Minh City, or as the cool kids call it here, it's Saigon.
Okay. Sorry.
And man, we got here last night, and we're leaving tomorrow morning, and we're all super bummed that we don't have more time here because this place is amazing.
Really?
Wow.
Tell us why.
You know, it's hard to put it into words, man. There's a different kind of energy here. The trip started in Singapore. We were in Singapore for 4 days ish. Then we were in Kuala Lumpur. Both cities, awesome. Like I really enjoyed Kuala Lumpur as well. Like really loved it. But both of those cities were like Singapore was like kind of quiet and clean and rich. A lot of money everywhere. Kuala Lumpur was a little bit more lively. A little bit more busy, you know, but still clean and whatever. Here in Saigon, it's like it's bustling, it's fast. There's energy here. There are a million motorcycles everywhere.
Nice.
The traffic is borderline insane, and the food is amazing. And which, by the way, I only have a couple of minutes because the guys are waiting for me downstairs. We're going to have what I hope is just the first dinner of the night.
Oh my God. What do you mean? It's almost 8:30.
Well, we were, yes, it's late for us, but we were at a CMT, Chartered Market Technicians Association event here in Bangkok. Or I'm sorry, where are we? Saigon.
You don't even know where you are anymore. Yeah.
I don't even know. We're going to Bangkok tomorrow. That's why I'm confused. It's on my mind. So we were at a CMT event tonight. Strazza and I gave presentations, and it, you know, it just ended, and we just got back to the hotel just now.
Wow.
Strazza's taking a shower right now because he golfed today, by the way, and he is super sweaty. Which, by the way, side note, we've been here on location in Southeast Asia for 7 days now. I'm losing track, and I don't think I've seen Strazza or our cameraman Giancarlo not sweaty the entire time. They've just been constantly sweaty.
Someone's asking in the chat. Someone's asking in the chat about the heat / temperature. Yeah.
I'm not gonna lie, it's borderline unbearable. We seek out air conditioning as soon as we can find it, as often as possible. It's not as Kuala Lumpur was not as bad. It was a little cooler because it's in like a valley ish, surrounded by mountains, so it was a little bit cooler, but still it's hot, and we're not going to get any relief anywhere we go on this trip. The humidity is off the charts. Yeah, and Strazza's not going to stop sweating. In fact, it's a good thing Strazza's sweating so much because the way he's eating.
Yeah, right.
This will help him not gain any weight, maybe.
Yeah. All right. JC said Strazza texted him and said that today was maybe the best day of his life. It sounds like you guys are loving over there. So we have Vietnam until tomorrow, and then we're going. I'm living through you now. We are going to Bangkok, followed by Manila, Taipei, Hong Kong, and Tokyo. All in the name of this documentary we're doing called Wall Street to All Streets. If you want to sign up for the distribution to get alerted when episodes go live, get to hang out with the guys for some behind the scenes watch parties as we talk about what stuff that didn't make the cut. Scan the link on the screen. Oh yeah, you know we're doing that. Scan the link on the screen. It's also in the description of this video on YouTube, I believe. And
did you guys didn't show that rough cut from Singapore when we were on the slingshot, did you?
No, I did not.
Yeah, that's safe for air.
No, I did not. Gotta maybe for the watch party. Maybe for the watch party.
Well, I'll tell. Can I give people a little teaser of what happened?
Yeah, of course.
So our cameraman thought it would be a hilarious bit to put me and Strazza on like a reverse bungee jump thing. Like you get shot into the air. It's like insane. Like you get shot like, I don't know, 400 feet in the air, 500 feet in the air. Thought it'd be a hilarious bit. So we did it. We were both scared as hell going into it. But we have video. They have like video footage of us in the thing, the whole ride. Mm-hmm. And in the video, like Strazza is so terrified.
Yeah.
And all he does is drop F-bombs the entire way. So that's why it's not safe for public consumption right now.
It looked like you were having the time of your life, and he was questioning all his life choices. It's what it looked like.
It was so his reaction. So they have like on that when we came off the ride, they had like a little thing where you can go down and watch the video that they recorded for you.
Sure.
And so we're watching the video. Strazza had to go do something else. It was just me watching it, and I was falling out of my chair laughing so hard. I was crying. I was laughing so hard. Looking at Strazza's reaction. It was unbelievable.
That's awesome. All right, Sean, we'll let you go. Go grab some banh mi or whatever it is you guys are going to eat, some pho. And we'll talk to you guys maybe tomorrow, maybe the next day. We'll figure it out, but at least one more time before you're done. And you're one week in. Actually, you're almost halfway done. You're on your third city. Bangkok is 4. You're going to 8, so you're almost halfway done.
We're just now hitting our stride, baby.
All right. Have a good one, man. That was a nice treat to hear from Sean. Guys, if you want to sign up for the distribution for the documentary, scan the QR code on the screen. Okay, we have the CPI number. We talked about it for like 5 seconds when it came out, but JC and I are not CPI experts. Our next guest is actually an economic data expert who trades these events for a living. John Netto is here, and he's going to break down the number, but more importantly, it's not about the number. It's how to trade the number. That's what we're talking about. So let's bring Netto on here. John, what up, man? How's it going?
It's going good, Spence. Interesting stuff. We definitely got a relaxation in price pressures. They were looking for that anyway. In terms of they was looking for a full 1% drop on the year-over-year number, and they got that and a little bit more. So headline CPI came in at 3% on an annual basis versus 3.1. But what people watch a lot is that core number because that takes out those volatile food and energy components.
Yep.
And the year-over-year core number was surveyed right at 5%. That actually came in at 4.8%. And the month-over-month, which is what a lot of the algos key off of, which had a survey of 0.3%, came in weaker at 0.2. So as we talked about, we got a nice upward move in gold. Gold went into the number right around 1940, 1939 on that August contract. And it's now trading at 1955. And so gold's right near the highs of the day right now. Fixed income, also the front end, is also rallying as this is taking some pressure off the Fed. And for many people aren't familiar with this, the SOFR futures are also rallying as well. So a lot of the front end, which reflects Fed pressures, is rallying right now, which means yields are coming down on a reflection of this weaker inflation data and how the Fed will react correspondingly.
Why do the algos key off of the month-over-month core number as opposed to any of the other numbers?
Sure. So the Fed looks at this core PCE. So the Fed, when they come out with their quarterly summer of economic projections, they come out in March, June, September, and December, where they post their forecasts. And remember, the Fed has 2 mandates. One is employment, and the second is price stability. And price stability is like a euphemism for the monitoring inflation. Okay. And so what you end up getting is the Fed then is going to react or respond to the data. Now, why does the core pay matter? Because the Fed targets core PCE, and the core CPI and the core PCE, or personal consumption expenditures, roughly parallel each other. There's a few modeling differences between the two, but since the Fed tracks the core PCE, the core CPI is one that people keen in on because food and energy does tend to be volatile. Now, tell that to someone that goes to the grocery store how volatile it is and why the Fed doesn't watch it, which is a whole other conversation. But nonetheless, that's why the Fed watches this, and that's why we get the reaction that we do.
And there's our opening bell. Good question from the chat here, John. Why would gold rally off this number?
Yeah, great question. Looks like Ken asked that. Thanks for the question, Ken. We appreciate your participation in the show. So gold is effectively an anti-dollar trade in many ways. Gold acts as its own effective currency. All right, and so when you look at gold, it becomes a store of value. And so if the dollar is weaker, all right, which the dollar sold down on this, because obviously if the Fed's going to be hiking less, that keeps interest rates down. And one of the big difference between currencies out there is this interest rate differential that we see. And so as there's less of a chance of the Fed hiking, the dollar then becomes less attractive relative to other currencies on the international level. And so a weaker dollar or less rate hikes creates a relative value between gold and dollar as a result of that. So when we see weaker inflation numbers, we see that rally in gold. We see the rally in the front end. We see the rally in euro, the rally in yen, the rally in the Canadian dollar. I mean, that's a dynamic of these interest rate differentials or perception of interest rate differentials taking place.
Got it. What other, so going into these events, you have your playbook, right? You have your expectations, but more importantly, you have, here's what I will do if certain things happen, right? If the number is this, I'm going to do that. If the number is that, I'm going to do this.
Correct.
How did that all play out for you?
Today, really well. In fact, we're still, knock on wood, knock on metal. So in that playbook today, we had if the market comes in at a weaker number, that we thought that the market was poised actually to more for a dovish inflation data. So we were looking for a weaker number, and it came in weaker. And gold went into the number at 1939. And part of the playbook was to buy it, up to $10 higher from this release, and to put a $7 stop and play for a $20 move. So average entry price on gold is about 1948. The stop at 1941. We did get as low as 1945, but now we're at 1959 as I'm talking to you. So I'm about $11 in that position, hopefully on the way to a $20 price target. May take a little bit off here, just as some position management stuff, because 1960 is an entry spot. But overall, we'll at least make money on this trade. And so it all came out in terms of what we were in beforehand and how we added to it afterwards.
You said you were also watching TLT. You're watching the NASDAQ. What else did I see here? You're watching the euro dollar. Anything there?
Yeah, all those markets have responded favorably. TLT, again, you're looking at the 10-year treasuries futures, which have one of the largest short positions of the last 5 years. And so when you get inflation that comes in and people are short treasuries, when you're looking for yields to go higher, on the day that yield goes lower, that's going to benefit and spill over to some other asset classes as people say, wait a second, inflation's coming in. That's not good for my treasury position, or at least my treasury short position, I should say. And so they cover. And so we're seeing some follow through in fixed income all across the curve on this weaker data, and gold's part of that movement. In fact, gold's been correlated to a number of fixed income products over the last 3 months, probably more so than what a lot of gold bulls would like to see.
Okay, so the CPI number, just to summarize the entire print, it was a good number, a good headline number, and it reinforces the idea that the Fed will raise one more time and call it a day.
Great question, Spence. So the Fed is definitely poised to hike next week. This number is not going to change that, but what we're debating now is there going to be a second rate hike for the rest of the year, and so this number it sort of removes that or lowers that possibility. So for a rate hike that possibly going to happen in September, those chances have been cut in half now on this number today, or at least taking a dramatic hit. I don't have the real time right in front of me, but it took a nice pull down on that. And so we still have 2 more CPI numbers before that September Fed meeting. But this is constructive towards lowering the chances of a second rate hike. But we will get a rate hike next week. Remember, they paused in June. And even though a lot of people thought they should have hiked in June, so they're going to do a little bit of makeup on that. So they'll hike next week, and I'll likely presumptively hike next week. And then from here on out, though, it's still very much in question. And if it's in question, that's when these strategies come into play and can be very valuable because there's uncertainty. And when that uncertainty gets reconciled, the market will move in one way or the other very hard.
Yep. Okay, so CPI came and went. We have another data point coming, right? We have a grains number, which I confess to know basically nothing about. So tell me about this number. When is it? First off, when does it come out? What should we expect? And what should we expect or look for as a potential trade?
Well, pull up a chair, Mr. Israel. You've come to the right place.
I'm sitting. I'm ready.
So this is the WASD. This is the WASD number. It comes out once a month, and it covers a couple of things. And it's going to be at noon Eastern time today. And we just had a quarterly grain stocks number and an update on the acreage, which came out about 12 days ago. I was on here. I had the chance to walk through that. So 2 big parts of this number today, both for soybeans and corn, and that's we get the yield per acre number for corn. Okay, and what that yield per acre number does is basically tells you per every acre out there, how many bushels of corn are you able to produce based on that acreage. So it stands to reason that the more bushels of corn you can produce per acre, the bigger supply there is. The bigger supply there is, the easing of price pressure. Yeah. Okay, so we have to follow like 2 steps of that logic, but that's the idea behind that. Okay, so if we get a higher than expected yield number, and on corn that matters because the pollination period of these crops plays a role. So corn pollinates in July, whereas soybeans don't pollinate until August. So because we're in July now, this yield number is really important because a lot of ideas or a lot of difference of opinions exist about how the pollination's gone, because different parts of the Midwest, the 3 I states where a lot of the stuff is grown, and also the north part of the Midwest, they experience sort of disparate weather patterns over the last 2 to 3 weeks, which has led to a lot of difference of opinion. So when you come to a big event and the market is genuinely uncertain as to what the outcome will be, that's when my strategy can be particularly effective, along with the inherent risk involved in trading. So today we have big yield number on soybeans, big yield number on corn, and then the stocks number as well. So what they call the new crop end stocks, meaning what's their actual supply. So they say, listen, we're able to generate this amount of bushels per acre, but also here's our current supply as well. So the soybean number and corn number both have those 2 components to them, and we'll be keyed in on that.
So what's the instrument here?
Sure. So the instrument is the soybean futures and the corn futures to watch. So we'll be trading corn futures based on that number, and then we're also looking at the corn futures as well. And someone talked about the drought in the Midwest, and that's Rick, absolutely. There's been, again, disparate weather. You go to certain parts of northern part, there's much more lush. Also the rain in different parts of the country has influenced this crop report. So we see estimates all over the place right now, because in parts of the Midwest, you're looking at it, especially outside of Chicago, talking to my colleagues there, they say you trade what's outside your window. The corn crop doesn't look that great, but you go to Minnesota, other parts as well, it is doing those things.
So trading the futures, can you, without giving away the secret sauce here, can you sort of walk us through your playbook for the number?
So the playbook today is we're looking for, so the yield per acre number on corn, which is what experts expect, is about 176.5 bushels per acre on corn. Okay, so if this number comes in less than that or materially less than that, then I'm going to be looking to buy corn, because I think corn's at a spot where it can rally a fair amount. It actually rallied pretty hard about a month ago, and then when the weather sort of eased up at different parts of the state, it basically puked back all of its gains. Okay, so today I think that if corn comes in and we get, if they're yielding less than expected, of that 176, then we're going to look to buy it and maybe play a 15 or 20 cent move higher. Conversely, if corn comes in with a worse yield number, meaning like 177.5, 178 yield per acre, I think corn can sell down and maybe go test that 475 level. It's currently trading about 504 right now. Let me get a current price in front of me here. Where my charts go?
While he does that,
502.
Yeah. Okay. Normally, guys, we have a futures and commodities focused show Wednesdays at 11:30 a.m. Eastern time. We're not doing that show today, sadly. Ian Cully is under the weather, so we'll have to break down this report on Friday's show. So that's the playbook. Busy day for you, man. You got the CPI, which is still percolating here as the market's digested, and we have the WASD report at, you said that was at noon Eastern?
Noon Eastern time, yeah. Noon Eastern time.
All right. So it's early for you, but we appreciate you getting, you're up anyway trading this stuff. So I'm
in Vegas, baby. We're always trading here.
You're always trading. That's right. Can't stop, won't stop. All right. Neto, always a pleasure, man. Thanks for coming on. We'll have you back on again next time there's a big, when is the next big data point we should be watching?
The Fed's in 2 weeks. The Fed's on the 25th.
All right.
The 26th. The Fed comes on the 26th. We'll be back.
All right. We'll have to get you back on to break that down.
Exactly. Spence, have a good one. Enjoy the
have
rest
a good
of
one,
everyone. Thanks.
All right. Thanks, John.
Yep.
All right, man, guys, there's so much we didn't even get to on the show today. We didn't even get to the hot corner. This is interesting, ladies and gentlemen. If you subscribe to the hot corner, you may have seen an interesting email this morning. It was a shutout. We actually had, for the first time in the history of the hot corner, we had no insider or executive or congressional transactions to report, and no open market unusual options activity to report as well. So nothing. There was literally nothing to talk about in the hot corner today. First time in the history that all the years we've been doing this, it's the first time it's ever happened. So, nothing to say on the hot corner front. We didn't talk about the chart report, which I want to mention briefly because later tonight, Patrick Dunawilla, who's editor of the Chart Report, and we are hosting a webinar. Okay, I'm going to put the link to this live event in the chat on the screen too, so you can see it. There it is in the chat. And here it is on the screen. It's a URL, but here, I'll make it easier for you guys to actually see there. There's the URL. Sign up for this event. It is not open to it's open to the public, but it's not going to be like widely available, right? It's free, but you have to sign up to be able to watch it. Okay, so that's the link. It's on the screen there. It's signup.thechartreport.com/webinar-July 12th. We're going over Patrick's newest scan. It's called the Buzz. It provides several actionable trade ideas every single week. We're going to talk about how the Buzz works, how the ideas work, how you can use them to trade and make money. And that'll be at 7 o'clock tonight. If you can't be there live, it's totally okay. We will record it. We will send you the video after it's over. So don't feel like you have to be there at 7 if you can't be there at 7 o'clock exactly. There's the link. Pat and I will be doing that tonight. What else did I want to mention? There were so many charts we had. Alfonso, I want to talk about Domino's, man. We didn't even get to Domino's. That was like the number one pre-market mover this morning because they announced a deal with Uber Eats. Now you'll be able to order Domino's pizza from your Uber Eats app or Postmates app if you want. So that was your biggest mover in the pre-market session on some heavy volume. Let's get that chart up on the screen. We don't talk about Domino's very often. For whatever reason, long been one of the restaurant stocks that trade at a high multiple. Not really sure why. Domino's, Chipotle are the two higher multiple restaurant names. Don't really know what's behind that, but that's just the way it trades. It's the way the street values it. So what are we up today? We're up 10% today in Domino's. Yeah. So we're above that base. Old resistance, new support, right? How many times do you see it? You see it a lot. So the Domino's chart I wanted to mention. What else did I want to mention? I wanted to mention DraftKings, and I wanted to mention ARK. DKNG caught an upgrade this morning. Was it Bank of America? I want to say it was Bank of America. Upgrade to buy, giving it a $35 price target. So, okay, actually got some premium here on that price target. So there's that DKNG. This is, I was going through the list of SPACs yesterday. I do that every so often just to, marvel at the carnage. DraftKings is one of the best performing companies that went public via SPAC. Of course, they did that before the SPAC boom. I think they did it in they go public in 2019? I want to say maybe it was early 2020. Let's see. They went public in it was early. It was April 2020, so it was early. But anyway, yeah, stocks up today on the heels of this upgrade. Thank you very much, Bank of America. $36 price target. Chart looks pretty good to me. And ARK, we talked about that yesterday. We're going to talk about it again because ARKK and ARKF and ARKG and ARKW, all these things are running. They are running. I said with Pat yesterday, it's not really a bull market until Kathy's funds start going parabolic. ARKK is starting to go parabolic here a little bit in the last couple of days. So above that 45.50 level, next stop, why not 54, right? Old resistance. Why not? Yes, Caesar's exactly right. All the All-Star Charts play is working today. Actually, Caesar, it's not just that. Everything is working today. What is down on my screen? Where is the red? The red is Bitcoin futures. The red is XLV. Cybersecurity is down a quarter point. And IHF. Those are on my list. The IHF is the healthcare providers ETF. So those are and the VIX. So the VIX, healthcare, cybersecurity, healthcare, right? XLV and Bitcoin futures are the only red on my screen. Not that I'm tracking every last asset class. I'm not, but it's mostly green. That's the point I'm trying to make here. Okay. I think that is a good place for us to end the show. We're going to end early today because, It's just me here. I'm by myself. And I got nothing for recess. So like, what do you want from me? So that'll be a wrap. Like I said, no what the fic today, sadly. So this will be it for our shows on the channel. We'll be back tomorrow morning on the show. We have a really good guest tomorrow. Her name is Cameron Dawson. She has like some fantastic like economic data charts and like cross asset charts. She has really good research. So that'll be on tomorrow's show. Super, super pumped for that. Also, Chart Request Live tomorrow. Don't forget that webinar tonight with Pat, 7 p.m. Eastern Time. What else did I want to say? Earnings start tomorrow. Oh my gosh. Can we get the calendar up here, Fonz, quickly? We got nothing today, nothing yesterday, but tomorrow, Pepsi, Delta, Fastenal, Conagra, Progressive. It's gonna be a show. And then the banks, of course, on Friday. This is going to be good. I love earnings season. I always feel like earnings season is game day because you really only get an inside look at the company, at these companies 4 times a year. And yes, earnings can be manipulated and they can be adjusted after the fact, right? Accounting can be very creative, but the market subsists on information, and this is information, right? So more information is always better, and we only get it 4 times a year. And I just, frankly, I love the volatility that it creates. It creates action. It creates excitement. And I like that. So basically the next, call it 4 weeks or so is going to be heavy on the earnings flow, and I am excited for that. Okay, that's a good place for us to wrap today. Thank you to our guest, James Bartelloni. Thanks to Kimmy Sokoloff. Thanks to Sean McLaughlin. Thanks to all of you in the chat. For any questions, comments, concerns, email us, questions@stockmarketmedia.com. Thanks to Alfonso for being the chart wizard and hanging out with me here as I wrap the show up solo. Everyone have a great rest of your day. We'll catch you guys later or tomorrow, I guess. Make some money. Follow us on Twitter. Do all that good stuff. And yeah, that's all I got. See you guys as I find my my outro video. Restream just changed the whole layout and I lost all my crap. I don't know where anything is. There we go. Okay. See you guys.
Run it.